Hello everybody, this is Just Luck Trades and we are entering a new series which is the fundamentals of technical analysis. This aids to prepare you for the journey ahead in trading, to help you in your market analysis and the proper execution of your trades. Please, if you've not watched my previous video, and especially if you're a beginner, please, the link is in the description below and it's a whole playlist on its own. Please go back to those videos. Don't go further in this video. Go and watch them before you come back to technical analysis so that you have a holistic learning going forward in your forex trading journey. Please, I would like you to like, share, subscribe to our channel as it helps the algorithm of the channel. Without further ado, let's start. These are the topics that we are going to be exploring in this series. This is to build a solid foundation in your technical analysis, your mindset, the psychology of trade, and a lot of tools that you need to become a successful trader. There are a lot of knowledge out there in forex trading, but these are enough for you to become successful. You don't need to spend any dime, for example, learning the introductory part of trading. You don't need to spend a dime learning technical analysis in its introductory forms. What is really expensive is trading methodologies or trading strategy, which people, I would tell you, guide with their hearts. Not everybody gives it out there. There's only few people that would give it freely. So we are going to go through the chat platforms. You familiarize yourself with the environment that your office, I would call it. Some people use MT4, some people use MT5, but in Cheslock Trade we use the trading view, and the link will be in the description below so that you create an account, a free account for yourself. You don't need to pay premium. Just the free account is enough for you for now. As you grow, you can make a decision whether to have a premium account or pay for any services. Then the market flow, accumulation and distribution, time frames, very important in our trading. Time frames. Indicators, not so important. The way we used indicators in just lock trades is a whole different strategy to that, but I'm going to expose you to indicators. The chart patterns, there are a lot of chart patterns out there, but we focus on peaks, valleys, and wedges. Support and resistance, exact levels, that's what we do with support and resistance. Then trends. So we're going to define these terminologies in the simplest way we can, try to explain to you, because most of the videos will be in the chat platform now. There's no more of the, we are talking trade now. We are no more doing the introductory part. This is going to be in the chat platform. So my next slide or my next session would enter into the chart patterns. After familiarizing yourself, then we start with market flow. See you there. Charting platform, and this is what it looks like. Trading view. This is the best charting platform I've ever come across. Some people use MT4, MT5, but for me trading view is more user friendly. It has all the tools you need to be a successful trader. You can pay for a premium package, but the free version gives you all you need. Although when you advance as a trader, you need to pay for some of the features as well, and it's yearly subscription. By the time you start making profit from trading, you can actually invest some of your equity to getting more features of TradingView. But while you are using the free version of it, some advertisement like this might pop up, so all you need to do is to exit it. It doesn't stop anything, it doesn't stop you from being a good trader. So that's what it is. So we are going to be discussing not about the features of the trading platform. We are going to be discussing about the market flow, which is very important. You need to understand the story the candles tell you before you even start your analysis, because your technical analysis is the foundation is the market flow. If you understand the market flow, it helps you to know where you are drawing up your support and resistance, of which would be talking about in future classes on technical analysis. So take this back. Um, let me take this back to the beginning of the charts. So this is what you're going to be doing when you're trading. You're going to be exploring your charts. You're going to dig deep before you take a trade. But once it becomes second nature to you, you don't need to dig so deep. But for now, you'll be digging deep when you're learning how to. When we enter into technical analysis in depth, you dig deep. Then with time, you get used to it. So the most important story the candles tell you, the one you need to know for now, is the body of the candle. Because the body of the candle tells you two things. It tells you, sorry, hold on, please. My tool is breaking up. So the first thing that the candle tells you is, the body of the candle tells you is the open price. Open price, and then it tells you the close price. So and they are very, very important information, the open and the close price. Then another thing is that the wicks, the story you need to know that the wick tells you is where the market was. So some people call wicks shadow, right? Some people, this week I told you, some people call it shadow, and truly it's a shadow. So it tells you where the market has been. So when you are starting your analysis, you don't consider the first candle you see in your trading platform. So this candle, for example, is not considered. It's the first candle in your trading platform. You don't need to consider it as a level or as anything. So you start with the second one. And then remember that when I was teaching you about the candlestick anatomy, I told you that for the bearish candles, the red ones, they open above and close below. And for the bullish candles, they open below and close above. And this gives birth to the colors of the candle. Because the colors of the candle, it does not really matter whether you're using green, red, yellow, purple. For me, I like using white and blue. But you just need to understand what the candlestick, the story they tell you. So, not considering this, so as this thing is the red candle, so it means that the market, the opening price, and remember that the story, the body of the candle tells you is the opening price and the closing price. And the wick tells you where the market was or has have been. So please with me. Just be patient. You're going to understand this trading. You're going to understand properly. So the market opened here. Always your reference for opening price and closing price must be the body of the candle, not the wicks. The wicks always tell you where the market has been. Don't forget that. So as this is a bearish candle, that means it opened above here. But you would find out that there is a wick above it. What it's telling you is that the market went up and came down. It opened here. It went up. Let me enlarge this so that we can see it better. So what it's telling you is that the market opened here, went up, and the bearish group or the market going depleting in value or going down, or traders shorting the market because anything can cause the market to go down, went down and reached this point, and then it went up again in price, then closing here. So the market opened here and at the end of the day closed here. And with reference to this first candle, the market closed below the closing price of the previous market, and that is why this candle is red. So just follow me, we will come to the green ones. Let's analyze the candle. So for the next candle, the market relative to this candle, because the next candle will always open relative to the closing price of the previous candle. So this market opened up here and went up as well and went down in price, but at the end of the day it closed here, and then it closed below the closing price of the previous candle, and thus that is the reason why this candle is red. So if you check what is happening from this place to here and from this place to here, you see that the closing are below this market, below the closing price of this one, and this market closed below the closing price of this one, and that is why these three candles are red. I hope it's simple, right? So let's go to the green one. So relative to the closing price of this one, the market opened here and it went down, and then it moved up in price and got to this point, and then it went down again and closed here. So this is the closing price of this market. Closing price. Closed here. This green market closed at that body of the candle here. Bear with me. So you see that, and then the closing price of this market, is here. So you see that the red one closed here, but the green one closed here. Thus, that is why this is a green candle, because the closing price of that market is higher than the closing price of the previous market, and that is why this color is green, indicating a rise in value. So if a market starts here, closed down here, you see that it was going down. It's a bearish movement, but now this was a bullish movement because it opened below and closed above. But had it opened here and closed somewhere here, this color will not be green, this color will be red. So I hope you understand what I'm saying. I'm trying to make it as simple as possible. In lock trades, we keep it simple. So now the next candlestick, same story. Relative to the closing price of this candle, it opened, went up, came down, and then finally closed here. See, very tiny body of the candle, but it closed there. So you see that the closing price is here, but you see that if I magnify this a bit, you see that the closing price of this one closed at the body of the candle here, but this one closed at the body of this candle, and that is why this candle is red. So again, relative to the closing price of this candle opened here, went up, came down, and then finally closed here. There was no wick, so it closed very strong bearish movement here, and you see that the closing price is below the closing price of this one, and thus this candle is red. And so far every candle is closing below its closing price. The market is moving downwards, and it's called a bearish movement. And then if it starts closing above the opening price, just like this one started here, closed here, and then this one started relative to it, opened here, went down, went up, and then finally closed there. And this one closed above as well. So you see, that's why these two are green. But the next candle opened here, went up, came down to this point, then closed here. You see, when I turn on like the another time frame, you can see the market behaving. I'm going to do it so that you understand. So now this is the story. Every single candle you see here, you can now enter the market and tell what really happened in the market at that time. Like for example, if you're looking at this region of the market, you know that this market opened here, went up, here, and closed here, and that's why it's red. And then the next one opened, went down, went up, and closed here. You see, but the closing is above this place, and that's why it's green. And then this one opened here and went up, came down, closed here. And you see this red one, it opened here, went up, came down, and closed here. So that is why the colors are changing to the bullish color, the bearish color. But at the end of the day, it's just telling you that when market opens below and closes above in relative to the opening price of the previous candle, the color will be green. And when it closes, it opens above and closes below the closing price of the previous candle, it is bearish and it will be red. But now we don't look at these things as single. I'm just trying to let you know or explain to you the story each candle tells. But at the end of the day, there might be times in your technical analysis you can look at things individually. This will help you when you're looking at things individually. But now when you are looking at the general aspect of the market, because you're not looking at just one candle every time, but this thing I've taught you will help you to draw your levels properly. So just keep that in mind. But when we are looking at price action on a general note, you look at what has happened. Let me take away. Let me take this one away. Sorry. Yeah. So when you're looking at the price, what you're really looking at is the general activity of the price. I'm not now looking at the single candles now. So what all I'm seeing here is that the price came down to this point, right? And then it traded sideways at this point. Then it went up at this point. It traded sideways. You remember your class on the three types of movements of the market? You have downtrend, uptrend, and ranging. So it ranged sideways here, and then it traded upwards here, and it goes on and on. It traded sideways a bit here, and then down here it traded it traded downwards here. You see, with this class you've understood what the single candles tell you, because that would play a very big role in your technical analysis. Most traders just learn about these movements like downwards, sideways, upwards, but they don't know the story the individual candles are telling. So right now I believe that you understand the reason why a wick is formed. A wick shows you where the market has been. So for example, what I want you to do is you download your trading view, you look at the market, and you're able to interpret what every single candle is doing. Like for example, when you see this candle now, you know that since the previous candle is a bullish candle, and this is the body, it does not close on the wick. This is the body, it closed there. So relative to the closing of this market started, and you know that this market pushed down to this point, and then it went up again and then closed here. So that's why this is green, because this is the closing point of the previous, and this is the closing point. It is higher, and that is why it's green. And so far it keeps doing that, the market will keep going up. But once it got to this point, relative to this closing point, another market opened. It didn't up that much, but it fell down, reached here, closed there. You see that the closing price, because it's a bearish candle, is below the the closing price of the bullish candle. So that's why it's red and it's moving downwards. So what you would observe again to make it simple is that whenever is a bullish movement, when it opens and you see the wick, you first go for the wick. That is, the movement starts from moving downwards before it goes, because it cannot move downwards and close below, because you remember that your bullish candles always closes above. So the first movement when it's a bullish candle would always be down before it goes up and then closes here. Then for the bearish, the first movement would always be up before it goes down and closes below. So you have to understand it that it will first go the opposite direction before it goes to the direction it's closing. So if it's a bullish candle, if you go back to your bullish candle anatomy, you see that it opens below. So if it's opening below, it will have to move downwards before it goes up. That means that's if you see a wick on it in market interpretation. But if it's a bearish candle, it will have to go up first before it goes down, and finally it will close. I hope you understand this. This is very basic but very important when you're doing in-depth technical analysis, because you have a lot to look into before you choose a position to take on a trade. So let me go to a 1 minute time frame. I'll still teach you time frame, don't worry about this. This time frame shows you the market every 1 minute. So let's see whether we can interpret the markets just looking at, oh, this is not showing properly. Let me choose a different. Let me go to BTC USD. Let's see what the 1 minute shows. This didn't. Sometimes this, when you don't pay for your premium, they would not show you data. But this is 1 minute. So this is what. Let me just share the light to what time frame is. Every 1 minute, since I'm in 1 minute time frame, every 1 minute a candle forms. So you see that the market is going down, right? It opened here. This is the opening price and it's going down. So I presume that after going down it will close, right? So I'm not going to stay here for it to have 2-3 candles, but this is what we look at when we are trading. So you see that every minute these candles will be forming. I'm just trying to, when you enter your trading view, explore it, and I know it will make much sense. So this particular course is a build up to your technical analysis, right? Your determining the story the market tells helps in your trade execution. So in the next slide, or in the next series, I'm going to be teaching on how to use this whole thing. This is very important. You take your time and learn how to use TradingView. I'm going to make it very simple. So you see that this candle has closed, and relative to the closing, another candle is forming. So depending on where this candle closes, it will determine whether it's red or green. So if it closes above this opening price, even by a small fraction, it will be green, no matter what. If it closes below the closing price of this, which is it may do, it will be red. So that's it. Please don't forget to like, share, subscribe, and click on the notification bell so that whenever we release a new video, you'll be the first to know. And also follow us on all our social media platforms: Facebook, Instagram, Twitter, and TikTok. And all the links you need for the previous videos are in the description below. And as well, the link to download TradingView is in the description below. Take care and have fun.